Well, there's no question that handful of very large cap names ostensibly benefit from the fact that we're all working and spending and consuming more at home than we usually do. There's no question about the business models being borne out by that. But some of these rallies, I think, have probably gone too far, and indeed to the point to where they've probably skewed the index. So the S&P 500 is now down only about 6% year to date, which is remarkable. But all of those FAANG stocks are up, some of them even up double digits. And when you think about the fact that those 5 names account for over 20% of the value of the S&P 500, that's a remarkable skew in terms of what the average stock is actually experiencing. There's no question the business models are borne out. I think the valuations have probably gone too far.
And just broadening out to a sort of more macro outlook for a moment, how concerned are you by this ratcheting up in tensions between the US and China once again, and more geopolitical maneuvering as we head into the November election?
Yeah, Rosanna, the answer is very, because I've spent the past month or two worried about a second surge of COVID-19 infections. And it turns out that the surge that I should worry about more is a surge again in US-China tensions. And not just the old story of trade, which I think will very much come back onto the table, but these new and unspecified threats to punish China for imposing security measures on Hong Kong. I mean, it's hard to forget, but it's also important to remember it's an election year here in the States, and this administration has made a political point over its tension with China, and I think that will certainly come back again between now and November. The market's not fully anticipating that. If they are, they haven't fully priced it in. That, to me, is a risk over the summer that could cause the market to stumble.
Scott, good morning. We're also joining in this discussion. What would that mean in terms of a dent in sentiment as far as U.S. techs are concerned, if indeed those tensions ratchet up in the run-up to the elections? I mean, would that mean a scale back for some of the high-flying U.S. tech companies?
Tanver, I think it could. I think we could certainly see a setback in stocks. We've rallied so far from the lows of late March that I think it would require something substantial to go back and retest those lows. But it would be easy, and it would not at all be uncommon to see a 10 or 15% correction in an otherwise upward trend in the market. I think we're still living in a market of heightened volatility. We've seen the volatility on the upside over the past couple of months, but narrowly led markets like the U.S. currently is, with such a focus on technology, tend to be quite fragile, and they tend to be quite volatile. They tend to react to market developments and even macro developments precisely like the U.S.-China relationship might impose.